Hello and welcome to Martyn Lucas Investor. My name is Sensei and we are here for the morning forecast show. And what are we calling it? Well, Uptober is real. In the first 3 days of October, we've got Bitcoin up nearly 10%, XRP following suit. And we've got the S&P 500 up to all-time highs, followed closely by NASDAQ. So we've got the whole risk on market rallying. So XRP, in my opinion, is ready to take off. We're going to be looking at that, some news around that, the chart analysis on XRP and Bitcoin. We also have confirmation that rate cuts are coming, extra rate cuts. We had them last FOMC meeting. I suspect we'll get them this month. I suspect we'll get them the next meeting as well. So it does look like we're going to be easing. And there's supposed to be a jobs report today, but instead what we're going to do is, because of the government shutdown, there is no jobs report. So I'll be bringing you the Sensei'S job report today. We'll put a time on the screen once we go through the jobs report. We don't want to keep you without data. We've got our own data that we're going to go off. The government is on shutdown, so we want to still produce the data for you. But because obviously because of the shutdown, that the data is not being released, but I want to bring you the best data, and we're calling it the Sensei job report. So let me bring that out. I'll put that in half an hour. We'll put that there, and then we'll do the data in half an hour. So that's when we'll go through our own jobs report. So thank you everyone for tuning in. If you have just tuned in, let's get straight into it. Smash that like button. Please do subscribe if you haven't done so already. And let me know in the chat, are you excited for October? First 3 days of October, and this is how the market has been. We're 3 days in. You can see this massive rally from Bitcoin. Only last week we were at 108,000. Now we've broken 120,000. That's 11% up in 8 days, and only in just October. If you look at where we were on the 1st of October to where we are now, that's a 7% move up. So that's massive in 3 days. 7% in 3 days. That's 1 year on the S&P 500 on average. So congratulations to everyone who held through it. Again, never financial advice, so please do not buy or sell based on anything I say. I do not have a crystal ball. I don't know if it's going to go up. I don't know if it's going to go down. My personal opinions and the reason I'm invested is because I'm a very high risk investor and I want to see nice gains. I do still give a 60% probability that we will go on that bull market that we are all anticipating, where Bitcoin goes to new all-time highs and altcoins go a little bit crazy. All in the next few months, I still have a 6% chance that's happening, 25% chance inflation gets out of hand, 15% chance the job market collapses. But because I'm over 6% bullish, and that bullish scenario is very bullish, in my opinion, the risk to reward for me as a high risk investor is staying invested, because you have to look at the risk to reward. Some people say, well, if you're only 60% certain that we're going to go up, why are you invested? Well, the simple answer is I'm 60% sure that we're going to have an altcoin season, and an altcoin season is explosive. That's 300, 400, 500, 1,000% gains compared to what the 25 to 15% chance, 25% chance inflation's high, that can result in a 10, 20% crash. Maybe on crypto, that's 30% crash. And if we get a recession and the 15% chance of a job market crash, that's about a 50% crash on crypto. I'm willing to take that risk. Maybe it's a 60% crash, maybe it's a bear market. But the risk reward, if there's a 60% chance in my analysis that we're going to have 500, 600% rallies compared to a 25% chance of a 25% crash compared to a 15% chance of a bear market, I'm very happy to take on that risk. I think for me personally, that risk reward is amazing. So I'm taking on that risk. Everything is going as planned. We are now in October. This is the month we're expecting ETFs. This is the month that we are expecting further rate cuts, so this could rapidly increase the upside. The only thing going against us now is this US government shutdown. It's not normally a problem. We've already analyzed previous shutdowns. In fact, most of the previous shutdowns resulted in big rallies. We saw, or resulted in rallies, not sell-offs. Last shutdown in 2019, I think it was. The previous one in Trump's previous term was we actually resulted in about 9 to 10% S&P 500 rally. Why? Well, because the Fed was also cutting rates then. So you can see this might be something similar. Fed is cutting rates now. We are in a government shutdown. It does not mean it needs to go down. And that's what I tried to make clear a few days ago. Everyone was panicking. Government shutdown. I'm going to front run the market and sell. Well, that was a bad decision. In my opinion, you should have bought or still held on. Again, not advice, but that's previously what we've seen. Government shutdown, these headlines doesn't equal what the stock market does. You have to look a little bit deeper. It's not as simple as you read a bad headline, you think you're very clever and you sell. That's not how it works. You need to understand the headline and understand what's happened previously. So I stayed, and we're holding, ready for the next leg up. The US government shutdown could, it's not all bullish. Obviously, it's not a great thing to be happening, but I would only start turning bearish maybe a week or so from now if we don't have any updates. If it's not looking very likely we're going to get a resolution, if we're not going to get our CPI and PPI data, that's when it starts getting a little bit worse. If the shutdown goes on for over a month, that's when, or if we start anticipating it's going to go on for over a month, or even a month and a half, 2 months, if we start suspecting, not if we're 1 month down the line, but if we start suspecting next week or the week after that this is going to be a very prolonged shutdown, that's when it gets a bit more risky. That's when people might start selling off risk on assets. That's when we have to keep we have to stay very much on top of all the news, and that's what we do every single day. So if you are subscribed, we're going live every single day. So please do subscribe. Please do hit the like button, because we'll navigate the markets every single day together and stay on top of any breaking news. So Bitcoin currently at $120,000. Absolutely beautiful. Why does the chart look beautiful? Well, if you look at the chart here, you've got a higher low. Back in the 1st of September 2025, you made a low around 107,000. In September the 25th, the end of September, you made a low at 109,000. That is a higher low. You can see there's a low here, higher low. That's always good to look for. Then the next thing you wanted to break, you had a high here, and then the previous high was here. So you had a lower high, which is not good. And if we got another lower high, that would be sort of confirmation potentially of a bear market. That's what we were looking for. We said if we get another lower high, that could be the next bear market. But in fact, we completely blew past that previous high, made a higher high. So now the structure is higher low. So low, higher low, high, higher high. The structure is now uptrend. So what does that mean? It means we are expecting to go to our next technical level, our next horizontal resistance, which turns out to be all-time highs, around 123 to 124,000. Is our next target on Bitcoin. The momentum is on its side, so if the S&P continues to go up, Bitcoin will find some resistance here, but the momentum is very much on its side, so I do expect it to break out of all-time highs and then go on to its next target, and the next target for Bitcoin is above 130,000. So from the level we're at now to the next target, it's about another 7% move up, and then we have higher targets closer to 150,000. If Bitcoin, remember, is the king of the market, we want Bitcoin to break out to all-time highs. That gives the liquidity to flow into altcoins, and this can happen all this month. There is no data today. Yes, there is no data today, but we've got our own data, and I'm going to be going through it in 23 minutes time. We've got the Sensei data report. That's what we're going to be going through shortly. If you have just tuned in, please do make sure you hit the like button. Let's see if we can get up to 200 likes. Okay, let's now go through some of the stories in today's newsletter. Remember, all our stories are from our very own newsletter, and you can sign up to it. It's the first link in the description. And straight after we do our data in about 22 minutes, we'll analyze that for 5-10 minutes, and we'll go straight over to Martyn at 1:30. So do stay with us. We've got a lot coming up for you today. So let's go on to our top stories before we go on to our data report and more about XRP and the crypto market. So the top stories today at a glance. So remember, even if you just sign up to get the top stories at a glance, just open the newsletter every single day and you can just spend 2 minutes just keeping up to date with the headlines. And if there's any of the stories you find interesting, you just scroll down a bit further and you read more. Then you can come on to chart of the day at the end, the economic calendar, the deep dive and all of that. But do consider getting the newsletter. It's the first link in the description. And if you do have it and you're not opening the newsletter, then at some point I will be removing you from the list and it'll be very hard for you to join back. So do take that into consideration. Don't just join and not read it. If you're not reading the newsletter, most of you are, but some of you aren't, you will be removed from the newsletter. So keep that in mind as well. So and it's for your benefit to read the newsletter, but if you don't want to take advantage of it, I won't be spending money to send you out emails. So today's stories at a glance. Meet Horizon's CEO. So next week is going to be very, very exciting. Vaz is going to be interviewing Horizon CEO. So Horizon Aircraft CEO joins us on October the 7th to discuss hybrid eVTOLs and aviation's next frontier. Keep your eye out for that. The next Meet the CEO in the series is going to be Horizon's Aircraft CEO. I will come on to all your comments and questions in a second. Let me continue with the top stories today. Then we come on to the jobs report and XRP and crypto, and I'll also be looking at your comments throughout that. So multinationals outperform. A weaker dollar boosts US multinationals like Netflix and Pepsi, while domestic firms fall behind. Trump's Ukraine pivot. Trump approves Intel sharing with Ukraine, enabling long-range strikes on Russian energy infrastructure. Bitcoin reclaims 120,000 amidst ETF inflows and shutdown-driven macro fears, fueling bullish momentum. Crypto bill clash. States warn new crypto bill could get fraud enforcement, risking investor protection during market highs. And jobs report missing. Shutdown delays key labor data. Private proxies signal softening hiring, boosting odds of October rate cut. We'll come on to our very own jobs report shortly. So let's go down to some of these stories. I just want to mention to you guys, we are having another CEO on the show next week, so stay tuned for that. So Brandon Robinson, Horizon Aircraft. So what we've got here is next week in our Meet the CEO series, we welcome Brandon Robinson, CEO of Horizon Aircraft, for an exclusive live interview on Tuesday, October the 7th at 2 p.m. Eastern Time. Mark the date in your calendars. Horizon Aircraft, remember this is the eVTOL industry. We have Vaz, who specialises in this, broadcasts everything about eVTOLs. The reason I love this industry is because it reminds me of the early days of Tesla. Not the early days of Tesla in 2012 or 2013, but even in 2018, when I started getting involved in Tesla, it was very, very clear to me that Tesla was going to perform well, that was going to revolutionize the EV world plus the energy world. But there was many shorters, many people that didn't believe it, many people that said electric vehicles are stupid. And look where we are now. Tesla has 100x from those levels, or 20, 30, 40x from those levels. This is the same sort of situation, in my opinion, about eVTOLs. There's a few companies front running. There's a few companies at the forefront of this, and Horizon Aircraft could be one of them. So do keep an eye out for this whole eVTOL side of things. Do keep an eye out for Vaz live streaming, because this could be Tesla in the early days, some of these companies. So Horizon Aircraft is a Canadian aerospace innovator developing hybrid electric vehicle takeoff and landing. So it sounds crazy now. Some of you might say electric taxis or flying taxis aren't going to be a thing. Well, they are going to be a thing. And the sooner you realize that, the sooner you can potentially start investing in these companies, because most people don't even think this is coming, and it's coming as early as next year. In some cities in China, they are already running and being used. So they're called eVTOLs aircraft, with a design philosophy that sets it apart from much of the industry. We're not sponsored by anyone. We're not sponsored by any eVTOLs. I'm just bringing this to you because of the fact it's so exciting, and I want as many people to understand this technology. While many players focus on short-range urban air taxis, Horizon is engineering aircraft built for longer range, higher speed, and broader utility. Their flagship Wright X Series blends vertical lift capability with efficient fixed-wing flight, a world's first concept that has already caught the attention of both investors and operators. At the center of this vision is Brandon Robinson, a former pilot whose aviation background directly shapes Horizon's approach. His time in the cockpit provides practical insight into what makes an aircraft not just viable, but truly useful. Brandon is applying that experience to guide Horizon towards creating aircraft that are safe, practical, and adaptable, with potential cross civil, commercial, and defense markets. Horizon's hybrid approach offers extended range, built-in redundancy, and operational flexibility. These strengths open the doors. These strengths open the door to applications such as medical transport, regional connectivity, and defense missions where battery-only eVTOLs may fall short. So this is a battery and sort of a hybrid system. With early customer engagement already underway, Horizon's pathway is clear to bridge the gap between helicopters and fixed-wing aircraft while leading the first wave of sustainable aviation. Join us live with Martyn, Lucas, and Vaz on Tuesday, October the 7th at 2 p.m. Eastern Time for this exclusive CEO special. Don't miss the chance to hear Brandon Robinson discuss Horizon's vision, their unique design, and how hybrid-powered eVTOLs could reshape the future of flight. We are very, very, very excited to have Brandon on the show, especially Vaz's first interview with a CEO, I believe. So this will be very, very exciting. Keep an eye out for the Tuesday next week at 2 p.m. Eastern Time. Let's come on to some more of the stories that are related to today's show. Remember, we are looking at Bitcoin having a 7-8% surge in the last week, and Uptober being, even though it's a made-up word and it doesn't really mean much, it's so far so good. So let's keep up with Uptober until it ends. So hopefully October is the month that we see XRP actually hit all-time highs. We're not too far away from it now. We are back above $3. Another 20% up from here for XRP, and we will be in price discovery. I don't think that is too far-fetched to start saying. I do think we will get all-time highs in October for XRP, potentially moving up to $4 to $5 in October, November. So we are on track to potentially make all-time highs this month. So I'll come on to that a bit more and give you my predictions a little bit more later in the show. We are also bringing you our very own jobs data in about 14 minutes time. Remember, the official jobs data is not yet is not available because of the government shutdown, but I've got plenty of our own reports to give you the best signal on what's going on. Let me quickly come over to our comments before we go over to our next story. If you have just tuned in, please do hit that like button. If you don't have the newsletter as well, let me quickly give you the link to that as well. There is the link for the newsletter. Okay, so let me just quickly run through some comments. I'm just going to skip through because we've got a lot to get through. Hello, Angie. Hello, Jamie. Hello, Anointed Flowers. Of course, Uptober is real. Matthew says, good morning, everyone. Yolanda is here. Mark Saxby. Thoughts on Bitcoin's price by the end of the year? Mark Saxby, I really don't know. It depends if the bull market continues or if it doesn't. I'd sort of take it month by month, week by week. But if I had to give I don't know what Bitcoin's price will be at the end of the year, but I expect it to be peaking past 150,000. So whether that's next month, December, I think we'll get 150,000 in this bull market. So maybe that spews over to the beginning of 2026. Yes, we can go to 200,000, but that's not really what I think. 150,000, it can peak around those levels. But that could mean it's at 80,000 by the end of the year if we already peak in October and then we start selling off in November, December. Or we could be at 120,000 in December and then peak at 150,000 in January. But this bull market, which I expect to be finished in the next 5 months, I think Bitcoin will peak around, or at least 150,000, around 150,000. Good morning, sir. Waiting for Martyn's crash/correction. Thank you, Sean June. Good luck to you. I don't personally like waiting around for a crash. If the crash comes, liquidate some assets such as gold or some of Treasury's bonds to get into the market. I do, of course, want to sell if I knew that there was a crash coming, and if I personally had personal conviction, which of course Martyn does have conviction that the market's crashing, then it makes sense to sell. Why would you not sell if you think the market's going to crash? I personally don't have that opinion right now. I've got a 60% chance that we have a soft landing, and then a 25% chance inflation gets out of hand, 15% chance that the jobs market goes out of balance or leads us to a recession. but I've explained that risk to reward, that 60% chance. Obviously, it's a higher chance in my book, and it's a much higher reward than the detriment, but that's my own opinion. Everyone should make their own decisions. Silver swing trade now out of XRP. Karen says, good afternoon, Sensei. Thomas says, Mobix is flying. Congratulations to you, Thomas. I haven't looked at Mobix. Is it flying today? Let's have a look. Mobix. Yeah, it's up 4%, 5% today. It was up 4% yesterday. Jamie says, does anyone here hold XDC? Yes, we do hold XDC on this channel. There is no BLS data today. Yes, we've explained that. We're bringing out our own data in 10 minutes. Matthew says, we are in a country that depends on product imports from other countries. The tariffs are going to be a big deal soon. Yeah, we can never forget about the tariffs' real impact. We might have not seen it yet. Of course, we're starting to see it in inflation, but maybe it gets worse. Who knows? XRP John T. Hi, all like button's been smashed. Thank you. Angie says, thank you, Sensei, for an awesome newsletter. Thank you, Angie. Zed Stacker, I'm looking forward to the Hover interview. Brilliant, Zed Stacker. Yes, that's going to be next week. Matthew says, before the shutdown, how much did the market depend on private data? Was it equally as important as jobs report before the shutdown? I wouldn't say it was equally as important. The official data from the government was much more important, but it certainly played a big role, because every time we got something like the ADP numbers, it still had an effect on the market. So it was pretty important even before. It's going to be much more important now, because that's the only thing we have to go off. Joseph Kelly says, good morning, Sensei. Any thoughts on BMNR? I don't, Joseph Kelly, but if you do the super chat, we can have a look at it. Jamie Rees says, XRP blast off an F1 weekend. Going to be fun. Brilliant. David Hensley's here. Thank you, David. Oh, there is the link for the $2,000 XRP giveaway live on the show, so you can always check that out. Mr. Jakey says, dude, I read the newsletter every day in my email. You didn't send them for over a week, and I was removed from the email. Now I'm on Substack. Please put me back on the email. I paid for it. Mr. J. Keefe, I don't. I apologize to go through that, but the way you worded that is as if I physically removed you from the email. I have not removed anyone from the email. I mean, even if you're a paying member and you don't read the email, I'm not going to remove you from the email because you're a paying member. I'm talking about the free subscribers who've been part of the newsletter for, let's say, a month and haven't opened a single newsletter. There's no point signing up to a newsletter and then not opening one for over a month. If you're paying and you're not opening it, I'm still not going to remove you because you're a paying customer. So, Mr. J. Keefe, I apologize. You think that that's happened, but that's not happened, because I don't remove any paying subscribers, even if you've signed up and not if you've paid for it and not opened it for 5 months. I wouldn't remove a paying member. So please do get in contact with me. You can send me an email. The email's on Substack. You can you're a premium member, so you can send me a message on Substack. You can send me a message on Discord X. You can email the email address linked to that, which is Sensei dash. You have to put a dash merch@outlook.com. But yeah, I haven't removed you. There's so don't worry about that. We will sort that out. Yes, I was on my honeymoon, so it was the first time we didn't send an email out for a week. So but that has nothing to do with you being removed. 362 people are watching. Let's hit that like button. Yes, Justin, let's do that. Mr. J. Keefe, I do read it. That's messed up. I paid to receive it. Mr. J. Keefe, I've just explained it, so hopefully you understand now. Craig Todd says, why click like when the channel has left the fam? I have no idea what you mean, Craig Todd. Please explain further. Jamie Reese says, what? Josh Marone says, good morning, everybody. Top of the morning, everyone says, Wilfredo. Dustin says, is the chart using now for $4.99 if we buy something, sir? Also, good morning to you. Is the chart using now for $4.99 if we buy something, sir? So essentially, if you want a chart request where I just give you my thoughts and opinions, again, never financial advice, on the chart, then you can do and bring my attention to a stock, then we have a look at it. I give you some chart analysis and you can do a $4.99 super chat. Or if you purchase merchandise on the website, martynlucasshop.com during the show and let me know you've purchased merchandise, we will do you a free chart request. That's what that means. Dustin. John says, good morning. Motto A team says, Sensei, that XL I told you about was 6 Vessel. It might be better Tornado Cash. Wow, Motto A team Cody, congratulations. I just don't like covering very, very high risk tokens that have just launched, which have potentially a high probability of being a rug pull potentially on the show. We just don't want to go down that way, that you can make plenty of money with these very much safer tokens. But thank you and for sharing it. And also, I didn't have too much time to look at it either, but I'm very, very happy you're up on it. What's your thoughts on Polygon? I liked it last cycle. I'm not sure how well it will perform this cycle. Remember, some coins come and go. For example, Filecoin went up to $250 last cycle. It's never going to do that again. Some tokens went up to ridiculous amounts. They're never going to go that high again, but you can still make money off them for a lower high. Some tokens will make new all-time highs. You need to know what was the last token, what's likely to be just a previous cycle token, and what's going to perform well this cycle. During the altcoin season, even Polygon will move. Yes, it will. Exactly, Jerry. Best position out there in the market. If it crashes, don't see that. That's a big if. Stephen Nunes says best position is out of the market. If crashes, I don't see it. That's a big if. Thank you, Stephen Donlowski. I love your thoughts. Mr. J. Keefe, okay, free, got you. I'm just not getting it. That's very strange. That's never happened before. Mr. J. Keefe, I need to know your email address. I'll definitely check it. Matthew, I would put the odds of a 25 basis cut in October at 70 to 85%. A larger cut is less likely. I'll put the odds of a 25 basis point cut in October at 70 to 85%. A larger cut is less likely. Yeah, there won't be a larger cut. And I'll put the odds personally at about 100, like 98% at the moment, with all the data we have. Can you check on that? Yes, I will check, Mr. J. Keefe. Don't worry. I wouldn't remove a paying subscriber. Of course I wouldn't. I'm talking about a free subscriber who hasn't opened an email in a month. Or never has opened an email. I'll email you. Thanks. No worries, Mr. J. Keefe. Glad that's all sorted. Thank you, Sensei, says Mark Saxby. Is Palantir about to crash? You can never bet against these stocks that continue going up, but I'm not bullish on Palantir at all. I wouldn't be buying it if I had any. I'll just sell it all. Lance Streck says, good morning. Vacation is over, packing now, going home, says Stephen. Brian says, I read the newsletter every day. Thank you, Brian. Old Me says, is Target a good buy? I think we looked at Target after a crash and we were starting to get interested in it. It didn't quite come down to our support, but yeah, I mean, again, I don't know your situation, and I don't want to give advice. What we did do was a trade from $90 back up to this level of resistance at $108. That's when we looked at it after that big crash. Right now, it's put in a lower high. I wouldn't really be interested in it until potentially $70, but that's just my own thoughts. Okay, shall I read the news there? I wonder how many members lost their position when Martyn sold crypto. Bet some followed his play and lost decent positions. You never follow anyone's trades. Always do what's right for you. Good morning, Sensei. I've noticed you haven't talked about uranium much on this channel, and I've been hearing lots of people talk about it. And I'm curious what your guys' thoughts are. We have spoken about it, obviously not in great depth because it's not really what people come and watch here. But the new plants, the modular plants, modular nuclear plants, that's becoming a very big thing around the world, and that's obviously great for uranium prices. So there are some uranium stocks out there. Sometimes it's better to get the nuclear companies that are part of the supply chain for these power plants. But yeah, I think we did a deep dive on it once in the newsletter. I can have another look at it for you. Are you a member? Steve Strobe, if you become a member, we can have a better look at it. What happens if inflation comes in hot or if the jobs report is bad? Where does the money market go? Matthew says, what happens if inflation comes in hot? Well, if inflation comes in hot, the Fed will be a bit more cautious about cutting rates. Depends how hot. And what happens if the jobs report is bad? If the jobs report is bad, then they're more likely to cut rates. Where does the money...
Rallo1 donated $2 through a super chat. Please look at the chart for KO, Coke.
Thank you very much, Rallo. Where does the money market go? I don't know what you mean by that. Final question. All in Oxy and MTD 100%. Steven Lewandowski is back in the market. EZ income. Hello, Martyn Lucas Investor. What do you think of Bitcoin 150k by end year? Yeah, I agree with that. I'm Sensei. I'm broadcasting on Martyn Lucas Investor's channel. Martyn Lucas will be on in about 15 minutes' time. Nick the Beluga. Hey, Sensei, what do you think about Epic and Astra? No thoughts at the moment. Josh, XR, Beats Bitcoin, HBAR, XLM, Sol, Wi-Fi, and XRP for generational wealth. Good luck to you. Membership so I can call in. Yep, here's the link for the membership. You can also just look next to the subscribe button. It says join. Where are you at? John J. I am in the UK. Hope XRP close above 315 today. That would be amazing. Mr. J. Keith, I messaged you on Substack, man. Thanks again. Yeah, so I have it. If you've managed to message me on Substack, that's only a feature for premium subscribers. So you've got, let me just check. You've got your you've still got your premium membership. It's just strange why you're not receiving it. Maybe it's something to do with your personal notification settings, because if you've managed to message me on Substack, and I'm just going to check it now, requests. I don't have a message from you on Substack, I don't think. What have you direct messaged me, or I'm trying to look and see where that message is. I don't see it. I'll have a look later. Message me on Substack. Do you mean you've sent me an email? I don't see anything. The only downside to newsletter is that there isn't one on a Sunday, says Brian. Rallo says, please look at Coke. Rallo, the chart requests are $5. If we have time, we will have a look at it. I have XRP purchase on Coinbase. We're going to go over to our own data report very, very shortly, so stay with us. I have XRP purchase on Coinbase, and I've never sold it. I've XRP purchased on Coinbase, says Brian Hill. I have never sold it. If I do lose it, take the highest price one to the lowest, mate. If I do it takes. If I do, does it take from the highest price one on the lowest?
Zach donated $5 through a super chat. Happy Friday. Robinhood added optimism. Can you look at that?
Optimism. Happy Friday to you, Zach. Say optimism. We'll have a look at it. I don't know what you mean, Brian Hill. Here again, depends on where you are as well in the UK. We're coming on to data reports. Stay with us. In the UK, in fact, the date we'll do it in we'll do the data report. It's coming out in. Just put this new timer just so we've got some more time to go through these. The date. I'm trying to answer your question. Brian Hill says, I have XRP purchased on Coinbase. I have never sold. I've never sold. If I do dues, it takes from the highest price one. I think you're saying if you sell, does it take from the highest price ones? To my knowledge, here in the UK, if you sell, you won't know which ones you've sold. You just have an average price for when you bought and an average price for when you sold. If you're in the US, Martyn has shown that you can do tax lots and you can sell individual cryptos purchases. But in the UK, it doesn't make a difference because the taxing structure here works in regards to average price, not certain holdings. Again, check with your tax advisor. That I don't. Depends on where you are. Coke is golden. I'm a member and interested in uranium. Thank you, Jerry. You can look outside the US, says, thank you, Sensei. Let's just fast forward a little bit because we want to come on to jobs data. You look outside the US. Yes, I'm outside the US. It looks like you're in a forest outside. Yes. It's some trees. Yes. EZ income. Kim Mundy, I've 10K and I'd like to know what to invest in. Well, unfortunately, you need to find a financial advisor. You can't get advice on YouTube. That would be very silly. Zach say, okay, brilliant. We'll come on to those requests. Will AVAX increase to 36 today? I'm not sure. You can do a chart request. Have you messed with AMM pools on XRP yet, Sensei? No, I haven't. In fact, I'm interested in commodities in general. Yeah, we do cover lots of gold, silver, commodities. Position is 4,633 shares of OXY at $44, and 1,182 shares of MTDR at $43.70. Congratulations, Stephen Danlowski. Let's see how that goes. Keep us updating. Martin Lucas Investor, it's so annoying we can't sell tax lots in the UK. They can in the US, yes, but even if we could sell it, it wouldn't make a difference because that's not how our tax system works. Brian Hill says, yes, no tax lots on Coinbase. Okay, let's go. I'm looking at it. Can't bring myself to buy Coca-Cola stocks. Okay, here we go. Let's get back to the show. Let's get onto the data. We'll go through it in 1 minute's time. If you have just tuned in, make sure you do hit the like button. Make sure you do subscribe. Remember, jobs data is cancelled today. What we're doing in 1 minute and 25 seconds is bringing to you the Sensei data report. We still have other data points, and I will be sharing with you exactly what's going on, even though we're not getting the official data. We have a very good idea from the analysis we've done to bring you the data report. So let's come on to that now. I do want to quickly do that request for Zach so we don't forget. What was Zach's request? He says, optimism. Let me do I assume it's a crypto. Yeah, OP. Oh yeah, OP. Okay. Optimism was added to Robinhood. Can you take a look at that? Yes, I can. So Optimism OP was a token launched in 2022, so it is a relatively new token, which could mean it performs better than some previous tokens. The base is at 46 cents. It has been hammered recently. Yeah, again, this all depends on the bull market. It doesn't really depend on this specific coin because it's a much smaller market token. It's more about if the bull market continues, and I do think the bull market will continue. So I do think these levels for OP, I mean, if the base is at 48 cents and 52 cents, we're only at 73 cents, and the targets in a proper bull market for a token like this would be at least sort of $2.66, potentially new all-time highs at $5. So at these levels, OP is looking very, very interesting. Again, high risk play, not a large amount of the portfolio, but if I was going to pick some altcoins and I was looking purely based on the chart and when it was launched and how close it is to the base, OP is looking like it can be one of those tokens that certainly heads up to $2.30 first and then potentially higher to about $4. Maybe it'll make new all-time highs, but even from here to a very conservative target, you're looking at about a 216% gain potentially in 3-4 months. Again, not financial advice. Okay, let's come on to our data. We're going to come on to our data now. Remember, the US government is in shutdown, but we've got our own Sensei'S jobs report. And after this, we'll go over to Martyn for some more insights. Drink a little, smoke a little, says Hypephone. No, no, thank you. Thanks for the comment, though. Okay, here we go. Here is the data report. So, what was due and when? This morning, Friday, the 3rd of October, the Labour Department was scheduled to publish its September employment situation, the monthly jobs report, at 8:30 a.m. That was supposed to come out in 7 minutes' time. It covers payroll jobs, the unemployment rate, and wage growth. The shutdown has paused that release. We are not getting it. Bloomberg won't be covering it. In fact, what are they covering right now? Let's have a quick look.
They hire an organization because they moved an organization. What sectors is that happening in?
Yeah, so Amory, we're seeing only 2 sectors. We're seeing this increase in switching, if you will. That is construction, and that is in the financial markets. And you've seen the headlines on the financial analysts that are switching all over New York City. So those 2 roles still have quite a bit of agency, and we are seeing switching there. But for the others, we're really seeing people stay put.
So, Becky, we've been in this low churn dynamic in the labour market for a while now. Economists have been talking about it on this programme. You have too. When things break one way or the other, we're always looking for that early indication. Now, correct me if I'm wrong, I think you used to lead Quaker Foods. When you oversaw that business, Becky, what kind of behavioural changes were you always looking out for a leading indicator of which way this economy was about to break?
Yeah, so John, you're taking me in the Wayback Machine now. We would look at number of items in the basket, and so how many goods are people buying, trips to store, average purchase price that you're actually putting in your basket. And I know now from the jobs market report, or what we see in terms of people actually hiring, who's hiring today? It is the cost-conscious consumer companies that are hiring. Domino's is hiring, Lowe's is hiring. So we're not seeing the high-end retailers hiring, we're seeing the more accessible retailers hiring, which tells me, in terms of early indicator, people are still very cost-conscious, uncertain about what's coming, and holding on to their dollars like they're holding on to their jobs.
Becky, this was great. Let's do it again soon. It's good to see you. Who needs to when you've got Becky Frankowitz of Manpack Group to go through what's happening in this labour market?
Totally agree. And what she's talking about is what we've heard from a lot of people. I just love the term she used in terms of job hugging. That's basically what Neela has been talking about.
There we go. Less employment. The people that are employing are the lower end retailers, not the high end retailers, and people are holding on to their jobs. So let's come on to our own jobs report. Remember, the official jobs report is not coming out. That's why we've produced our own. So what Wall Street expected, this is what we were expecting. Going into today, most economists survey clustered around 40 to 60,000 net new jobs, unemployment at around 4.3%, and wages up 0.3% month on month. Individual polls differed. Reuters preview leaned towards 39,000 and 4.3%. FactSet cited a median of about 50,000 as the median. So think of this as a narrow, subdued range rather than a bold call. So we were looking at about a 40 to 60,000 new jobs being added, but we also were expecting a revision of previous jobs as well. So that's not too important. That's what analysts were expecting. That's probably around the amount we would get. But with no official report, what can we use? Well, here is our Sensei. This is our Sensei job report, because we've put together our own jobs report, and this is what the market will be looking at. Again, probably not for my newsletter, but all of these individual things is what the markets will be looking at. So here are the private proxies. Remember, there are private companies reporting different statistics that helps us gauge what's going on. So here are the private proxies investors can lean on. What each measures, what's the latest reading shown, and how it reads in plain English. So you might have heard about ADP. So the ADP National Employment Report, payroll processor data. So what is it? First of all, ADP tracks anonymized payrolls for 26 million workers, actual pay stubs, and who's on client payrolls. It's a private sector only and not designed to predict the government report, but it's directionally useful. So the latest figures from the ADP, the National Employment Report, with a very, very large data set. Remember, it is a private data set. We're not looking at government jobs here, but it gives us a very good indication. The latest is 32,000 of private jobs in September, with small and medium-sized firms losing headcount and large firms adding some jobs. So you heard there, the large jobs, the ones hiring, let's just say the Walmarts, the big retailers for cost-effective goods, they're hiring. But these small firms, these mid-sized firms, which are normally higher price goods, higher costs to keep them running, they are losing headcounts. And anyone who's in a job right now, they are looking to stay at jobs. They're not looking to move around because they are trying to keep hold of that job. So what that shows, that is a weak signal for hiring and momentum. So the ADP figures, we're going to go through very certain figures here from the private market to try and gauge our own data report. But ADP report the payment processor data for about 26 million workers, summarize it to about 32,000 private jobs in September. That is a weak signal for momentum, and that's directly from the ADP employment reports. We've then got ISM manufacturing and next week's services employment manager surveys. What is it? Well, it's purchasing managers say whether conditions are better or worse. Above 50, more firms expanding than contracting. Below 50, more cutting than hiring. So if you've got above 50, jobs are fine, you're hiring, the market's fine. If you're below 50, we're losing jobs, you need to cut rates, you need to put the economy back on path. What is the latest news we've got from that? Well, manufacturing employment is 45.3. It's below that 50 figure. Still in contraction even as production ticked up. That says factories are managing head count lower, freezes, attrition, and layoffs. That's what's happening right now in the manufacturing
Fonzie donated
sector.
10 Australian dollars through a super chat.
Oh, hello.
XVG, any thoughts?
XVG, I don't know about it, but we will have a look at it. Is it a stock? Is it crypto? I'm sure I'll find out. But Fonzie, thank you so much for the $10 super chat. Remember, it's your super chats that keep us live. Thank you so much. I will look at that after the jobs report. If you are still with us, make sure you hit the like button. Please do make sure you subscribed. If you haven't subscribe to the newsletter as well, there is a link. Remember, we give you all of this information every day, different deep dives, the top 5 things you need to know every day. All of that sort of stuff is in the newsletter. The link is the first link in the description and in the chat right now. Then we move on to our next indicator. So remember, we just looked at ADP, which is showing a weak signal for hiring momentum. Then we looked at ISM manufacturing and next week's services employment. And what we're looking at with the ISM manufacturing, above 50 would be that they're expanding. Below 50 means that they're cutting. What's actually happening, we've got the figure of 45.3 in September. The latest figures, that shows that they're not hiring. They're managing their, they're bringing down their headcount. They're freezing, they're laying off people, and they're not hiring. And then we move on. And remember, these are all private figures. So that's why we've got access to this. And this is what's part of our jobs report. So Challenger, Gray, and Christmas announced layoffs and planned hiring. So what is it? Corporate announcements of future jobs cutting and hiring. It's not the same as actual layoffs, but it's good intentions gauge. So the latest is September layoff announcements fell 37% month on month to 54,000, but year-to-date hiring plans are at the lowest since 2009, a soft demand signal for labor heading into Q4. We've got slightly mixed data here. We've got layoff announcements that are falling month on month, but that's again month on month. Things can very easily change month on month. But if you're looking year to date and you're just zooming out a little bit, it's showing that hiring plans, so the plans obviously to hire people, is actually at the lowest in over 15 years. So it's a very soft demand signal for labor heading into Q4. We've then also can start looking at online jobs postings, Conference Board, Lightcast, HWOL. So what is it? Again, all of these signals at least will give us an idea of what that data would have been that should have been coming out 2 minutes ago. So we can look at online job postings. What is it? A broad count of help wanted ads, which tends to move ahead of actual hiring. Latest August index 110.9 is down 5% year on year. The Conference Board says future releases may be delayed during the shutdown. Fewer postings equals employers advertising less, which usually precedes slower hiring. So that's a very important point to take into consideration. Because of the shutdown, that means there could be fewer postings. And when you have fewer postings, obviously the employers are advertising less, which means that in the future what you're going to get is slower hiring. So this shutdown could effectively cause slower hiring, which in the future, month on month, we can start seeing that affect unemployment rates. We've also got a couple more indicators. We've got the small business time clock, Homebase. What it is, real-time clock-ins, hours worked at 100,000 small businesses, useful for main street services like restaurants and salons. So this is now looking at how many hours are actually being worked. So the latest is in September showed lower employee participation and hours, consistent with season cooling, but also hinting at cautious staffing. Treat as high frequency volatile but good color on hourly work. So again, it's a very small indicator. You have to take it with a grain of salt because many things affect it, but essentially again, more data showing that there is lower employee count and less hours being worked. So essentially with staffing is and unemployment is rising. And then you look at the manager surveys and confidence. The ISM manufacturing comments highlighted headcount restraint and consumers' confidence fell again, with more people saying jobs are hard to get. That aligns with cooler labour markets narrative. So all of this private data is essentially showing that the unemployment number wouldn't have been brilliant. It's probably going up. The jobs are certainly in danger. And what does that mean for rate cuts in the market? Well, it means the Fed needs to cut rates, and the Fed will probably cut rates. And the market is now pricing that in. If you look at the rate cuts expectations, and we've written it here. So they've jumped. The rate cut expectations have jumped. So futures markets via CME's Fed Watch tool now price a near certain October cut and good odds of another by year end. The combo of weaker private labor signals a data blackout. The Fed has less visibility, nudges policymakers on the side of support. For markets, that typically means lower treasury yields, pressure on the dollar, and a bit for longer duration growth stocks. Moves we've already seen around ADP release and shutdown headlines. So the expectations for a rate cut in our October 29th meeting, remember that's live on the show, so make sure you subscribe, put the notification bell on. If you haven't hit the like button, please do. That means we are expecting another rate cut here in October, but we're not stopping there. The market is now also expecting, if we look at December, another rate cut, a 90% chance of a rate cut in December. So we can have rate cuts back to back in these FOMC meetings, the last two of this year, which of course could fuel continuous rallies on the stock market and crypto market. The only reason where rate cuts start getting dangerous is if they're too late to cut rates. And how would we know that? Well, we would know that because unemployment would start surging towards the upside, and the Fed could start doing emergency rate cuts, which would be a terrible thing because it would show that they're panicking. Again, that's not what I'm expecting, but that's what I'm giving a 15% chance to in my broader prediction. The shutdown, how it ends. Remember, we want the shutdown. We want it to end so we can start getting this data, so the Fed doesn't start panicking with the lack of data to support their decisions, and start showing some uncertainty, because uncertainty brings the market down. Again, as I've explained, that's the only bad thing about the shutdown is. Well, of course, lots of people getting laid off is a bad thing. But in terms of the market doesn't care about the shutdown until it affects the markets in terms of certainty and uncertainty about the FOMC meetings and data. We didn't get the data report today. That's fine. We won't get it. We might not get it next week. That's fine. But if that continues for a couple more weeks, that's when it gets very, very concerning. The shutdown, how it ends, and why either side blinks, and what it means. Remember, we're going over to Martyn in about 5 minutes' time. So Congress can pass a short continuing resolution. This is how it ends, by the way. So Congress can either pass a short continuing resolution to buy time. Number 2, a longer continuing resolution with a few policy sweeteners. Or 3, a full-year omnibus funding package. Without a deal, many agencies stay closed. Most data production at labor, commerce, and census stop. Why would some people will say, why would the Democrats agree to stop? Well, they want to also reopen government cleanly, avoid economic drift, and because polling historically punishes the side seen as causing shutdowns. A short continuing resolution with minimal riders preserves leverage later. Why would the Republicans yield? Well, they could yield because pressure from business groups, defense hawks, visible service disruptions, and political risk from prolonged furloughs tend to push leaders towards a face-saving continuing resolution. Spending caps targeting rescissions over an indefinite standoff. So these are some realistic scenarios to be prepared for. A quick patch. This is what we're sort of expecting, or the market's expecting. In 1 to 2 weeks, a short continuing resolution with minimal policy attachments. Data resumes in time for the release for inflation and retail sales with short delay. Remember, we're getting CPI and PPI, and we want to get that data. If we don't, then that's what might cause a delay or may cause some uncertainty. The market has a brief relief, yields grind lower on a cut and soft growth narrative, equities muddle higher as earnings start. That would be a great situation. In about 1 week, 2 weeks, they have a continuing resolution and they just open up the government again. Number 2, What can also happen is stop and go in October, 3-4 weeks, a longer continuing resolution, but only after a messy back and forth. Multiple key data releases slip, CPI, retail sales, PPI. This could be likely as well. Markets are choppy, defensive and durations outperform, dollar softens. So we could have it go on for 3-4 weeks. It could look quite ugly. There could be quite a few news stories coming out in the next few weeks where everything seems really, really bad, and then you get a lot of volatility. But by the end of it, they do a continuing resolution, and it's all fine. This is when it's actually concerning. A prolonged standoff, a 5 to 8 weeks plus, I think never seen before. Agencies remain hobbled, data blackouts compound, and real activity starts to take measurable hit. Tourism permitting federal vendor payments. Markets will go risk off. Shows up, credit spread widen, small caps lag, and talk of rating agency noise reemerges. Remember, you don't want to lose another rating point in the US on the debt. So CBO and private estimates each suggest each week dents GDP. Most losses recover, but not all. That is the situation where you start getting really concerned. And if we start seeing that that's possibly a scenario, maybe 2 weeks down the line, 3 weeks down the line, it's too late if we're already 5 to 8 weeks. It's too late, the market's already crashed. But that's why we're going to be navigating the markets together, maybe in 2 weeks' time. We might start getting a signal that this is going to happen, and that's when the markets can certainly crash. But I'm not expecting that. When does the shutdown really start to matter for investors? Immediate today's jobs report is missing. Weekly jobless claims will also not be published while funding has lapsed. If it lasts 1 to 2 weeks, we risk delays to CPI. That's on October the 10th. That's next week, next Friday. We're expecting CPI. And PPI on October the 11th. Inflation prints that anchor Fed's October decision and retail sales. Confidence surveys and private surveys still arrive, but the high impact government data are the ones and markets trade. So that's some more information there on what's coming up. And then beyond a month, you start to feel the real economy drag. Furloughs, delayed payments, and permanent outputs lost that CBO observe after the 2018-2019 episode. Small in percentage terms, but not zero. So that's what starts happening after a month of this shutdown. Coming up to the end of it, so bottom line for retail investors. The missing report would likely have been softish on reports near 4.3%. That's what we would have expected. 4.3% unemployment and moderate wage growth. The private data we do have, the ones we've gone through, ADP, ISM employment, jobs cuts, posting data, and small business hours, the Sensei jobs report, mostly lean cooler, not hotter. That keeps rate cut expectations near done deal for October. Shutdown playbook base case is a short continuing resolution. Treat a brief data blackout as noise, not thesis changing. If we drift past 2 weeks without a deal, expect higher headline risk, more volatile sessions, and stronger bid for quality and duration until the lights come back on. If we get a solution to this, next week the markets will rally. If we don't get a solution to this by the end of next week, then people will start getting concerned. So that's what we're going to be navigating right now. That's the data. What time's the actual data in? This is all the data we have. I've compiled for you. Someone's asked what time's the actual data in. We don't. The market is shut down. I have compiled to you the Sensei data report with the ADP, the ISM report, the job cut, the posting data, the small business hours, the manager data, all of that to give you what the data would have been. It would have been about 4.3%. There is unemployment's going up. That is why rate cut forecasts are now up to basically 100% for the FOMC, which we're covering later in the month. We did have a request by someone to have a quick look at something. I'll give you my final thoughts for crypto in a second. Martyn's probably already live, so I don't know if we've got the link yet. I'll give you that. We're going straight over to Martyn for some extra analysis. XVG, let me see. Someone requested this. Remember, you can do a chart request for $5. XVG. I need to know if it's a stock or a crypto. Fonzie, if you can put in the chat right now, is it a stock or a crypto? Because there's a stock called, I think you're talking about the crypto. There's a stock called no, you wouldn't be talking. I'm assuming you're talking about the crypto. Here we go. So we go USD. It's called Verge. Any thoughts? I don't personally know about the token. Looking at a quick chart request because we have to come back to reports. This was around in 2018, it was around in 2017. Remember, don't expect a new all-time high because it's been forming lower highs, lower highs. This has been around since 2014 and I've never heard of it. I wonder why. So lower high, lower high. So I'm definitely not expecting to create all-time highs or go back to the 2021 highs. The good news is there is just subtle buying going on behind the scenes ever since the end of the bear market. You have been forming higher highs, so there are people buying it. It is a very volatile stock. It's up about 62% today, so I wouldn't really be touching it right now. In all honesty, but certainly, I mean, if the bull market comes around, where can this go? I think it can go back to its 2024 highs. It could go up 100%, and then the next target after that possibly would be maybe a 50 or 25% retrace from the 2021 highs. That would be, oh yeah, perfect. So the 0.02 is certainly a target, and then I'll just ladder out at the next levels. I wouldn't expect to go back to the highs, but maybe you'll get 4 cents, maybe you even get 7 cents, but I wouldn't be holding my breath for it. But certainly the good news is it's creating higher highs. Bad news is this token is probably never going to create all-time highs, and it's just a dying token, which doesn't mean it won't perform well. It just means it won't create new all-time highs. But thank you for the request. Okay, so let me wrap this up, go over to Martyn's show. So remember, if you want all of that information, we always put it out. The deep dives are different every day, but you get the top stories. You get the top stories for free. So if you just want to know what's going on in the market every single day, it takes about 2 minutes to read. There it is. And if you want to read into it a bit more, it will be in the 5 things you need to know. If you want the deep dive, if you want the access to the community, if you want the charts of the day, what charts I'm looking at, all of that sort of stuff, you can sign up to newsletter. It's the first link in the description. It's also the link in the live chat. Right now, we're going to go over to Martyn. I think, let me just see if there it is. There's Martyn's link. There it is. Okay, perfect. So thank you everyone for tuning in. Every single trading day we go live. With 2 hours before the opening bell, 1 hour before Martyn goes live. So make sure you are subscribed. Make sure you do tune into our shows and all of those sorts of things. I hope you enjoyed the Sensei the Sensei. Let me just go over here. The Sensei's jobs report. Have I missed any comments from members? Thank you, David Hensley. This is the most... Okay, I don't think I've missed anything. Okay, Martyn's going live now. So there is a link. He's put it in the chat. This show will automatically take you there. Thank you for tuning in. Remember, the Electrum event is on Sunday, so I look forward to seeing any of you. It's around the normal time where my Sunday show is. I might do a shorter Sunday show and take you straight there, but on Sunday is the Electrum event. I look forward to seeing all the Electrum members there. Until next time, take care of yourselves and each other. Go straight to Martyn. He's live right now. Bye-bye.